Following the court hearing that happened this morning in Washington between Citadel, SEC, and IEX, the market platform, with some other news coming from Gary Gensler today, man, the guarantee of the short squeeze in AMC happening was already there. But after this, it's through the roof. So when you look at closely the way Citadel lawyers handled some of the arguments they put in front of the judges and the reaction from the judges, it tells you a lot about this whole thing. And by whole thing, I mean Citadel leading the market share in terms of executing orders coming from retail investors is definitely going to an end. And you will understand with me that it does now make sense why not only the White House, Elizabeth Warren, the senator, but also the SEC plus other people from the GOP Senate members in Washington are actually going after Kenny's boy head. Why? Because this is a whole issue. This is a whole problem, not only for the apes. And this is why I think it's one of the biggest reason why you should see AMC and really shut off the noise going on, especially with the line. It will go up, it will go down. But when you really think about it, guys, the retail investors, it's more than just the 8 million we are into AMC stock. It's more than that. Retail investors is pretty much everybody in the US invested through individual stocks like AMC, but more even so through pension funds, mutual funds, 401ks, IRAs, 529s, etc., etc. And the exact same thing that we're seeing here and which is wrong happening within AMC and GameStop is the exact same thing happening with these other type of investment vehicles. That's why with Citadel getting bigger and bigger and bigger, it's definitely an evident conflict of interest. And that's the case where Citadel, the SEC is trying to build in order to reduce so much power that Citadel has over the market, but more importantly, over the sector where retail investors are concentrated only. And it's not a good thing for the market. Now, the job of the SEC is to make sure money keeps flowing into the market. So if we, retail investors, do not have that confidence, if we don't have that trust that putting our money into the market is going to bring us as much as it's supposed to bring, then we're going to supposedly and obviously remove that money from the market. Even though we leave a residual amount, they don't want that to happen because it means market crashing. It means some people losing money, some people losing their jobs. It means a lot of things that people in high places don't want to happen. But when you think about it closely, guys, if they don't want this to happen, and with all the rules they actually try to put in place, and it doesn't really do anything to our specific player with AMC, I think they're doubling down and trying to corner Citadel, because even Citadel, the arguments they have in court today does not make sense because the judge are seeing through pretty much the BS. They're calling the BS. They're seeing that Citadel is trying to use their power in order to maintain a specific position that is giving them a competitive advantage over the overall rest of the market. So by having this delimit order into place and by having payment for order flow being banned, these two combinations of events, of things happening, it's definitely the worst nightmare for Citadel. So SEC Gary Gensler mentioned this again today. We already knew that it was something he talked about, but after what happened in court today, for him to go back to this, it does speak volumes. So let's listen.
So we have a number of projects, some of those highlighted in the report. There was a page or two at the end called additional considerations. One is related to equity market structure itself. Are we today in the 2020s appropriate using technology of the 2020s to look out for regular investors? And nearly half of the market, the stock market this is, doesn't trade on lit, transparent exchanges, but in dark pools or off exchange. And instead of having orders compete, one by one compete so that the investing public, the retail public, gets the best price, or what's called best execution. Right now, a lot of this is flowing into the dark pools to the wholesalers through something called payment for order flow. Secondly, is a bit of the plumbing. I know it's not as exciting for your listeners, but it has to do with the clearing and settlement cycles and shortening those so there's less risk. In the January events, people have been restricted from trading. A third thing is something called digital engagement practices, where what sometimes colloquially is part of that is called gamification. New digital analytics, new algorithms that are maybe promoting more trading rather than investing, or promoting activity that is good for the applications but not good for the individual. So these are some of the projects we're working on.
These are some of the projects they are working on. So it's still on the table. We already knew that, but it's a reinforcement of the statement that besides everything that happened past the publication of the GameStop report, this is still on the table. So just to say that, guys, I know we are impatient and we all want this to happen, but let's just be patient. It's going to take a little bit of time, more than we anticipated. We've been, 9 going to 10 months now, but it's still going to do what it's supposed to do. So just keep your expectations in check, and when the time comes, you'll know.